Hey everybody, in this video I'm going to do a little something different. I'm going to look at analyzing a stock that I've been watching, FuboTV, and just to look at its statement of cash flow to see where its money's been going and have a quick look at whether it's a business that looks to be investable or and whether it's looking in deeper into it. And so the stock's been falling of late in the past few weeks, and so I thought, it might be worth taking a look at. And so if you want to follow along, you can go to Morningstar.com, where I'm going to download their data from. And the one thing that perked my attention about FuboTV is that these guys have a negative gross profit over the past 12 months, which is a bit of a concern because, it's one thing to have a negative net income, but even if your gross margins, which is just your revenue after your cost of goods sold, if that's negative, that's a problem because, you still have to cover over your overhead and other operating expenses. So I thought, it might be worth taking a look at, see where its cash is coming from. So if I click on cash flow, I get the statement of cash flow over the past 1, 2, 3, 4, 5 periods. So with Morningstar, the cool thing is I can just download this into CSV. And I'm going to open that up. And now what I can do is, quickly analyze the stock's statement of cash flow. And TTM stands for trailing 12 months. So I don't need to include these individual quarters. I'd rather just look at a 12-month period because there's a lot can happen that in a span of 3 months that distorts the numbers. So first thing that might be helpful to do is look at the totals, like net cash from operating activities, financing activities, and also investing, and I'll pull net cash as well, just to have a quick glimpse of what's been happening. So, for instance, even though the company's has a net income of minus 599 million, its cash position is actually improved by 129 million. So, one thing you could do, this is a small data set, but you could do something like conditional formatting to help have numbers stand out a bit more. So if I have something like a gradient fill here, I can see that, they burn through 149 million from their operating activities, which is their day-to-day. And that makes sense given that the gross margin is negative. And so the only reason that they ended up in a positive cash position was because of their financing activities, where they raised $279 million. So that gives me a quick overview as to, how the company's been doing or how the company's been raising its cash. So the next thing I'm going to do now is actually create the waterfall chart. And to do that, the first thing I'm going to do is get rid of any subtotals because that's just going to double count, right? So I don't want to include the same numbers. So I'm going to get rid of net cash from operating activities, which is just the sum of all the operating activities. And I'm also going to get rid of cash flow from investing activities because this is just a header, right? And so it doesn't add any value. And I'm going to do the same for net cash from investing activities and cash flow from financing activities. And then once I get to other financing activities, everything else is either a subtotal or just the calculation. So I'm going to delete that as well. And the one thing I can also do is get rid of some of these zeros because, this is just going to take up more space on the chart. So I'm just going to get rid of things that had zeros. I'll keep investment in property, plant, and equipment because that's a key one. But once that's all in there, now what I can do is go to Insert, select the chart, go to All Charts, and then select the waterfall chart. And hit OK. And because there's a lot going on in this chart, I'm going to right-click, Move Chart, and onto a new sheet. Oops. And so the really cool thing about a waterfall chart is, it shows you how you got from point A to point B. In older versions of Excel, you'd have to manually create this chart, but Excel's made it a whole lot easier now, which is really cool. So the one thing I'm going to do is I'm going to make more room for the chart itself, and I'm going to delete the chart title. I'm going to shrink down the font to about a size 7 for all these labels, just to make it a little bit easier. And I probably don't need this legend. There we go. So just to maximize the space that I have on here. So with a waterfall chart, you start at 0. And since the first item is, as you can see, net income of minus 599, it pulls that down all the way here, right? So to almost minus 600. But then we start adding items back, like amortization and depreciation. That's a non-cash item. That doesn't impact cash flow. So we're adding that back to adjust this net income figure, right? We've got impairment charges. That's, again, just an accounting entry. Investment losses, unless you actually realize an investment gain or loss, it's just an accounting entry as well. You've got stock-based compensation, you got AR, AP, accrued liabilities, working capital. And this is why I kept investments in plant, property, equipment, because it's a reminder that this is where the investing activities start. So if I go up here to non-cash items, other non-cash items, I see that here it added 38 million, and that puts me roughly at about, that negative 149 million that operating activities were at. So that tells me after all these adjustments, we went from minus 599 all the way up to here to minus 149 million in operating activities. So this is all the stuff that was added back and the impact of it. And so the next section is the investing activities. And the investing activities go all the way up until we get to these other investing activities. So there aren't a whole lot of items on here, and there really isn't much of a net change. And really, unless the company's investing into a lot of equipment or it's made an acquisition, you're generally not going to see a whole lot of movement here. Unless it had investment gains and losses. But for a company like Fubo that needs cash, it's probably not going to be doing that. So that means it's going to need to raise cash from somewhere else. And that's it in the financing section. And this is where it gets a lot more interesting. So we've got debt issued and debt repaid. So we saw 37 million came in from debt that the company issued, and 39 million went out because the company paid down debt. So it's almost a bit of a wash here, because it almost issued the same amount that it paid. So not a whole lot of difference here. So we can see that the company isn't raising money through debt. And once we get to the main item, common stock issued, 279 million, we can see that's where Fubo's getting their money from, is they're issuing shares. Because prior to this bump in 279, we were sitting right here at a negative, again, about 150 million, relatively unchanged from where we were after operating activities. So without this boost, this is break even right here, zero, the company would be in a negative position for cash for the year. And that, what I mean by that is their cash balance would have declined. But because they issued shares, their cash position increased. And then if we go back to here, this is slightly above 100 million. So about that $120 million mark. So that tells us that because they issued shares, that allowed them to grow their cash position. And so the important takeaway for investors is that, one, the company's not generating cash from its day-to-day operations, which is a problem, because if they're relying on share issues, that means you own less of the company because it's diluting your ownership. And as more shares hit the open markets, that means that there's more supply than there is demand. And when that happens, that's going to pull down the share price. And even when the company just announces that they're issuing shares, often people just start selling their shares already because they know what's coming. And so that's one of the dangers with a company like this that isn't generating positive cash flow, is because they're probably going to have to either, issue debt or issue shares. And shares, you don't have to pay interest on them, so it's cheaper for the company in a lot of cases. So the danger with Fubo is that, its margins don't look to be improving there, or even if they do improve, you're still looking at a very minor percentage. If they go to slightly positive, that still might not be enough to prevent them from having to issue more shares. So for an investor, that's a bit of a risk, because that means if the company's going to issue shares over the next 12 months, then the share price could come down. And unless Fubo changes its or makes improvements, I guess, to its operations where it's more profitable, then that could be something that continues on for the foreseeable future. So that makes it a bit of a risky buy. And that's why ultimately, after looking at this, I realized that, it's not a great stock to invest in right now, not one that I would want to, just because of that risk. Because it's great that the company's growing, but it's spending way too much money to do so. and to the point where it's going to have to rely probably on share issues or issuing debt in the future. And neither one of those is great. So that's in a nutshell, just a quick analysis of how you can look at a company's statement of cash flow. And you can do this as well for for the income statement, just to see how everything flowed through, how it got from sales all the way to its net income, to see what expenses were driving up its costs, or what was the main reason for the change. So I just want to do a little something different here. And so if you like this video, if you like to see more of this type of analysis with other stocks, hit the like button, and also post a comment as well, that if there's certain other ones that you'd want me to have a look at. But yeah, just thought it's a good case study of how you can use Excel for real life examples like investing and analyzing a company's earnings and statement of cash flow. So thanks for watching, and hope you found it useful.